I'm embarrassed by how long it took me to start investing in index funds because I learnt about the stock market back in 2020. I started looking into it back then when the world was going crazy. And I thought to myself, this is the time to start investing in companies. But I couldn't get my head around it. I was watching these videos on YouTube. People were sharing all this crazy information about how to know when a company's going to go down and how to know when it's going to go up and all this stuff. And I'm like, there is no way I'm going to ever be able to get my head around all this unless I totally give up the business, stop investing in myself and my career, and instead just focus on this, which to me is crazy because I've got a skill that I'm very, very good at, which is search engine optimization. And I'm building that skill and I'm getting better at that and I'm growing my business. And to then pivot into this random thing that I have no experience in at all and don't know if I'm any good at, I'm like, there's no way I'm doing that. So I give up with it. But I shouldn't have. I should have kept looking because I never knew about index funds back then. Now, index funds, instead of picking an individual business that you're investing in, like Apple stock or Microsoft or something like that, you're instead investing in a group of them. So this fund contains lots of different companies, not just the one, which spreads your risk out massively because it is very possible that one of those will totally lose its value. It's very, very possible, but it's very unlikely that this big group that's being managed, like all of these companies that are being managed and some are being replaced over time if they're not performing very well with better performing companies, it's very unlikely that that's ever going to go to zero. And if it does, you're going to have bigger problems than your investment being worth nothing because the world will probably be burning. That's not to say that you can't lose money over the short term, but over the long term, it's very, very unlikely. And that, for me, is where my level of risk is at. I don't have a high risk tolerance. I've worked too hard to get what I've got. So I can't be just throwing it away and hoping for the best. That's not me. I'm not a gambler. So for me, as I say, the index funds are perfect. Now, what happened in 2020, I gave up. But if I never gave up looking into it, I would be in a much better position right now because I would have been able to have put in 4 additional contributions into my stocks and shares ISA. Now, if you don't know what a stocks and shares ISA is, basically a stocks and shares ISA is, in the UK, you have the ability to invest up to 20 grand a year in the stock market tax-free, which is mind-blowing because when I made this decision, I didn't even know that was a thing. My accountant told me about it and I was like, really? And he was like, yeah. I was like, I got to look into this more. That can't be true. Looked into it. I'm like, it's real. What the hell? So yeah, you don't have to pay any tax on any of the gains that you make. You can put 20 grand in every single year. Now, I could have been doing that over the previous 4 years because I started in the beginning of 2024 and I could have had another 4 investments, which would have put me at 80 grand. I could have put in tax-free, which would have raised my total right now to 160 grand invested. Now, if, and I just done the math on this, if I had done that right now, I would be getting, if we were getting an 8% return, and I like to look at it on the lower end, I know that people say it often goes a lot higher than that, and it can go a lot lower than that too at years, but on average, let's say it was on the lower end and we were getting an 8% return. If I'd have started back then when I first learnt about this, I would have been getting about 12,800 a year coming in. Now, I use accumulation funds. So this means that everything that it earns gets reinvested back into the stock so that it can compound, because that's all I really care about. I just want to put the money away somewhere so that when I'm a bit older, then I can rely on that, which is what I know someone has done right now. There's someone I know who's retired very, very young, and he's done this by consistently just investing, constantly maxing out his stocks and shares ISA into index funds, and now he's totally retired. He doesn't need to have any income from any activity. You don't need to work. You don't need to do anything at all. And that's where I want to get to. And hopefully that's where you'll get to too. And this, in my opinion, just from my research and where I've come to with it all, this is the safest and easiest way of doing it. The lowest risk way of doing it. I'm not, again, like I said in the previous video, I'm not a financial advisor, but this is where I've come to from my research. So what I wanted to do is I wanted to share this with you because I want you to know that this isn't as hard as you think it is. It's so easy. Now, as some people say, it might be that people want you to think this is more difficult than it is so that you rely on these financial companies, these institutes, whatever, so that you feel like you have to give your money through them and they get their cut. Maybe it's that. I wonder if a lot of all the messing around that people do, the overanalysis and the nitpicking and all that, I wonder if a lot of that is ego. I wonder if that's people wanting to feel good about themselves, that they're really, really smart or whatever it is. I don't know, but all I know is that get started now because there's absolutely no reason not to. It's so easy. As long as you've got excess money, if you're not dependent on this money, if this is something you want to invest long term and you're not going to need it in the next few years or something, definitely do it. And let me show you this. Let me show you how easy it actually is to do this. So if you sign up for a Trading 212 account, there's an option here for a stocks ISA. You see what I've got selected there at the top left? And if you invest into index funds through this stocks ISA inside a Trading 212, that is your stocks and shares ISA. You don't need to open anything additional. You don't need another bank account or anything like this. This is something I really couldn't get my head around, because to me, I thought Trading 212 was just a trading platform. I didn't know that this was also your stocks and shares ISA, but this is all you need to do. Just sign up there and then you can do it through this. So this is so easy to put your money into index funds that now I don't even look at it as much of a chore, because for me, this whole thing, I timed it, took me 4 minutes and 48 seconds. And that was with me filming it and highlighting certain things with my mouse, because I knew that I'd be doing a voiceover explaining what it is that I'm doing when I share this footage. So I could have done it a lot quicker than that, but 4 minutes and 48 seconds and I've invested 20 grand into index funds. So it's as simple as that. You just go to stocks ISA inside Trading 212, you make the deposit from your bank account, you just have to confirm it through your mobile phone app, and then you'll have exactly the same as what you see there for me. The 20,000 has now been deposited to my account. When I come back to the home tab, I will see that listed. Oh, sorry, when I go to the dashboard here, I'll see that listed under cash. It will show that I have £20,000 there that I can now invest through my stocks and shares ISA. So what I like to do, and you do it however you want, don't just copy me, do whatever it is that you want to do. What I do is I put 15,000 into VUAG, and VUAG, as you can see on the screen, is Vanguard's S&P 500 tracker. That basically gives you a slice of the 500 biggest companies in America, so you own a little piece of those 500 companies. Now, the other thing I was going to share about this is that this is an accumulation account, which means that the dividends that are paid to you are reinvested back into this index fund. And that's where the compounding comes from. So I don't want the money coming into my bank. I want it to keep compounding and keep growing, because then I can get more dividends off of the dividends I got last time, if that makes sense, because now my money is compounding, yeah? So that's VUAG. I've purchased the 15,000 of that. That will sit there in my pending, and then in 13 hours and 10 minutes or whatever it was that it said, that will then be mine. Now, the other thing that I like to invest in is FWRG. And FWRG is a global stock market tracker, and it follows the MSCI World Index, which is made up of around 1,500 or so different companies across the developed world. So I like this one, even though it's still heavily US based, which is still a good thing, but even though it's still heavily US based and there is crossover from the S&P 500, I like this because it's that little bit more diversified. So that's why I just decided just to put that 25% of my investment into that as well. And that really is all there is to it. That is literally it. That's how you invest in index funds in the UK tax-free. It's as simple as that. Hopefully you found this video interesting. If you did, like it, comment it, ask questions, whatever, and maybe check out one of these other videos here.